All right. Good evening. Good evening. And welcome to your Master Your Money with Eric Anderson. Today's topic is understanding your tax bracket and W-4s. Okay. You guys stop overpaying or owing the IRS. So Eric's going to be jumping into here. But hey, Eric, how's your week been? I know it's tax season. I know everything is crazy. It's going on. I know we're waiting for folks to come on this evening for this topic because I had to realize I had to change some stuff on this topic too. Um, but how's your week, sir? How's your week been going? Give us a little
Absolutely,
rundown.
absolutely crazy. Like we were saying before we got on there, it's a blessing to be so busy, to have so many clients. I appreciate all the clients. I really appreciate all the referrals, all the new clients I'm getting this year and stuff like that. It has been it's been very, very hectic, but it's been great. I cannot complain. I cannot complain. So, you know, like I said, it'll be like this till pretty much April 15th, and then it slows down. And then, like I said, around August 15th, it picks right back up with all the extensions and stuff like that. So, we get a little break to, catch up on the bookkeeping clients, catch up on the financial coaching clients, and all of that stuff. Kind of, reach back out to those people and stuff like that, just to get back in tune. See how everybody's doing, because around that time you're in the middle of the second quarter. So we're kind of going over profit and loss statements, going over our financial goals and stuff like that to see how those things are going. So it's always busy. It's absolutely crazy right now, but it's always busy. So
That's good. That's good. Thanks everybody for joining us this evening. We have a very good topic today. Really, every topic is great, but thank you for joining us. Those of you who can hear us, let us know that you're there, that you're listening, that you're there. And if you have any questions regarding any finances, I know today's topic is understanding your tax bracket and W-4. So if you don't know anything about that, if you're a little bit familiar with it, but unsure about how you can probably be saving some money, moving some money around, figuring out ways you can not only keep some of your money or for retirement or move some money around so you don't have to pay taxes or owe taxes in a sense. So how's everybody doing? Let's see. We got anybody in the chat? All right. All right. Let me see. I know we got Instagram. Okay, we see. All right. All right. Hi. Hello, Leah. Hello, Leah. How are you? How are you? Make sure everybody's getting in right now. Let me see here. Eric, how's the IG going right now?
it's got a couple people in. We're good.
Huh?
A couple people in. We're good.
Okay, cool, cool, cool. All right. Well, we can go ahead and get started. Let me see here. Yeah, we can go ahead and get started, Eric. We go ahead and kick it off. And
So, as you know,
why is this topic important when we talk about understanding your
so
tax bracket in W-4? Go ahead.
So especially this year, I've had quite a few clients who have come in when we get ready to start doing their return. I tell people all the time. Usually, a person who does taxes can tell if somebody's going to owe taxes just by looking at your W-2. Right when you first walk in, you put your W-2 down. You could tell by the taxes that are being taken out if that person's going to end up owing. So many people, even if you have kids, they claim one or two or whatever because they think they're going to um, get the child tax credit. So being able to taking out least amount of money and still be able to get a return. But what a lot of people do not understand, especially if you're married, there are certain tax brackets that if you reach these tax brackets, a certain portion of your money is going to be taxed at that different bracket. I actually sent you that right off the IRS website that shows the 10, 12, 22, all the way up to 37 as far as the tax brackets. And people get upset when they're sitting here with me and we're going over the taxes and they're like, I don't understand, I'm claiming zero, on my on my W-4. How do I still end up owing taxes? And like I said, if you look at somebody's W-4 and you're like, okay, I'll just use 150 as an example. I know a lot of people don't make that, but I'll just use 150 as an example. So if somebody makes $150,000 and they take out $17,000 in federal, they think that's enough money to not end up paying taxes, right? Um, I can barely see it. It's a little blurry. But as you can see, as you go up into the tax brackets, a portion of your income is going to be taxed at a higher rate. So if I'm somebody who's in the 10% bracket, I'm pretty good. You see, like there for somebody who's single, the 0 to 12 is being taxed at the 10%. So $12,000 is not a whole lot of money, correct? If I'm married, $24,000 is not a whole lot of money for a person who's married as well, right? But that percentage of your income is being taxed at the 10%. As you go between, as you can see, for a married couple between 24 and 100,000, it gets up to the 12%. So again, if I'm only taking 10% out of my check and I don't have kids, I'm going to end up owing taxes, correct?
Right.
Because I don't have the child tax credit, I don't have, the earned income credit, things like that. And then, especially once you get up into those tax brackets, you're making too much money to even get that type of credit anyway, the earned income credit and things like that as well. So then imagine a couple who's making between 100 and 211,000. You're taxed at the 22% tax rate. And again, that is not a whole lot of money if you think about a married couple. That's two people making $50,000 a year.
Yeah.
Correct?
Yeah.
And so if you are both claiming 0, or one of you is claiming 1, or one of you is claiming 2 because you have a couple of kids or whatever, and you're not taking out enough money in taxes, you're not going to get a huge tax return. A lot of people are going to even end up owing. A lot of times I have to tell clients that they actually have to take out extra. They have to actually have extra money taken out of their check to make sure they don't end up owing taxes at the end of the year, especially if your kids are over 16, so you don't get the 2,200 this year. It used to be 2,000 last year, but now it's 2,200 this year. So imagine, a lot of times I have clients where the year prior their kids were under 16 or 16, and then when we do the taxes this year, you show them, you're like, hey, last year you got the $2,000 for your kid, this year it's only 500. So that's a $1,500 swing as far as a tax return, correct?
Mm-hmm.
Or if you're somebody who, interestingly enough, I even have clients who they take turns claiming the kid. Like if they're divorced and they claim the kid, you've seen that before, right?
Yeah.
If I don't change my W-4 and this is a year that I'm not claiming the kid, I'm going to end up owing, correct?
Right.
And so the more and more I keep going up into the tax bracket, you can see even between 211 and 403, that's all the way up to 24%. And I actually do have clients who, between the two of them, they make between the 211 and the 400. So you're being taxed at the 24% tax rate. But again, it's only for the two, between the 211 and the 400. You're only being taxed at 24% for that amount. Anything between the 100 and the 211, you're being taxed at 22%. Anything between the 24 and the 100, make sure you understand that part. You're being taxed at the 12. So it's the effective tax rate, meaning that you're being taxed for those different, as you continue to go up in the bracket. You don't get taxed the 24% for the whole 211. Don't be confused on that. You're only getting taxed at 24% for between the 211 and the 400. So as you continue to make money, and especially even if you have kids, when you look at that type of tax bracket, you can still end up owing money in taxes if you are claiming 1 or 2, or even if you're claiming 0 and you are not taking out extra money. So again, like I said, I have a lot of clients who get upset. I have people who walk out saying this doesn't make any sense, and I walk them right through it. I show it to them, and they're still not happy about that. Like I tell people all the time, I don't make up this tax bracket. This is the tax bracket. Correct? We went off, right off the IRS website and showed this tax bracket. So it's really important to understand how these numbers work, especially if you do not have kids. So
it's
so
interesting, Eric, because that 12% tax rate versus that 22 hit different, right?
Definitely.
And then so if you make, I guess, so single, right? And then if you're single and you make over $50,000, now you're in a different tax bracket, right?
Correct.
Which they take more. But then if
Correct.
you're married, filing joint, then if you make over 100,000, as far as
Collectively.
married 100,000, if someone makes 50,000 married each, then that would be considered over that
Correct.
100,000 in that
Correct.
22%, right?
Correct.
Okay.
And then you even see for the head of household part too.
Yeah.
That's like anything else. It's like kind of like the standard deduction. It's like it's the in between.
The
So,
in between. Right.
correct.
And that 32% look different though, right there. That 30, that
Correct.
24, the 24 to 32 look different. So if you make over 403,000 something, it's gonna jump up to a bigger tax bracket, right? Like
So a
so
great
tax rate.
example of that is I have a lot of clients who are coming in. The big thing now is changing your moving your traditional into a Roth. So a lot of people are transferring that over. You know, we won't get into that today as to why people do it, but a lot of people transfer money from their traditional to their Roth. And they say, I always get the question, how much money can I transfer before I hit the bracket? And it's like, what is the rest of your income? Not just that. You see what I'm saying? What is the rest of your income? Because it's your overall income that's going to push you into these certain brackets. So that's why a lot of times you'll see advisors and stuff meet with the tax person and they'll talk about what their brackets are. And then they'll say, okay, you can put in this amount, but if you put in this amount, it's going to push that amount into that bracket. So you'll pay taxes on that bracket. Matter of fact, I talked to somebody on the phone yesterday because she was taking money out of her IRA, and she was saying they're taking out 20% for the 10% and for the penalty. And she's like, I'm being told I'm probably going to end up paying more tax than the 20%. There it is.
Yeah.
The 10% to take it out, and then the 10% for the penalty. So if I go up to the 12, the 22, and the 24, depending on my income, you're right. I'm paying even more taxes taking that money out.
Wow. Hey, after that, it doesn't go up, right? After 37%.
Well, yeah. I mean, if you make $1 million, then yeah.
I'm just saying, if I make 10 million, it's still 37%, right?
That's the max. It's 37%.
Okay, that's what I'm saying. That's what I'm saying. If I make 10 million, then 37%, it's not gonna go up. But it seems like you have to struggle, and it takes out so much until it stops, and then you can kind of make more money than whatever money you want to make, as long as they're taking one rate out, right?
Yeah, but that's the max, 37. Yeah.
Yeah. Okay. You want me to stop sharing this? I'm gonna make sure I'm stop sharing. You want to look at it more? Or?
Oh, we're good.
All right. Cool.
But I just thought it was important to show that because, like you said, it's. I don't want to do whiteboard stuff or whatever, but it's important for people to see that because when you're just telling people that, they don't believe it. But usually, I'll show people line 1 on the form, and then I'll show them their taxable income, and then I'll show them the tax, and I'll say, you see, that's way more than 15% of line 1, right? And they're like, yeah, it's like because you're being taxed at a higher tax rate because of your taxable income. So
that's good. That's good.
So
that's good. So what would I know I had this little issue where I guess where I had to change a W-4 to, I think I will change it from filing
married joint
filing separate, right?
Yeah.
And then I had to change it to joint.
Correct.
That's what I did just recently. So I was like, I don't even remember that when I, so when it's like you don't remember what you did at that time. And especially, I guess, thinking about it is that maybe every year you need to readjust what your financial goals and plans are and make sure this is going to fit where you are currently in life, right? Because everybody's tax break, you could have got a big old raise, you could have dropped, a lot of different things could have happened where
one
you got to figure out.
Turn 17 or, all those type of things you can think about instead of just filing your W-4 and keeping it moving. That, like I said, a lot of times, the first time I talk to clients and they owe a bunch of money and they say, I don't understand why I owe a bunch of money. And then I say, did anyone ever talk to you about changing your W-4? And they always say no. They always say no. And then like client who was here today, it was like, they're like, well, what do we do? I was like, you can change your W-4. And they're like, what does that do? I was like, you're going to get smaller checks. So if I don't owe money, if I'm getting a small return, I would probably just leave it alone, right? I would just say, hey, I'm just going to keep on getting that return, as opposed to, oh, I want to get a bigger check, where like they say, the IRS is saving your money or whatever. I would rather, again, like I said, unless you have kids or something like that, your goal should not be to get a tax return. Because again, if you are getting a tax return and you don't have kids or anything like that, you're giving the government money basically, because there's no credits, any of that. Again, unless you have a business, you're doing that where you're showing a business and losing all this money and all that stuff. We won't get into that. But if I'm just straight W-2s or whatever, and I'm not in college and I don't have kids or anything like that, my goal should not be to get a return. My goal should be to walk out of here not owing money. Because at the end of the day, if I'm getting a huge tax return, it's because I've basically, like they say, I've loaned money to the IRS.
The IRS, yeah. And I want all my money.
And I want all my money.
I want all my money. I want to spend it now. I want to use it now. I want to put my money to work for me now, versus them holding it and then there's no interest or nothing collecting on it or nothing. I could have actually put that in a vehicle for it to grow, right? I could have put it in my Roth IRA. I could have definitely, put it in the traditional one, or add more percentage on my 401k, right?
Yeah,
that works. So
a lot of people do say, no, I'd rather just claim zero, so I'm positive I'm not going to owe money at the end of the year. Okay. But then I see people who get huge returns, and then it's like, hey, you really need to go change your W-4, because you're having way too much money taken out. You're getting this huge return at the end of the year, especially if you don't have kids or something like that. That's kind of crazy. But most people who end up owing money at the end of the year, even if they have kids, it's because, as you see, they're making so much money that they're pushing up into the brackets, and they're still claiming one, or they're still claiming two. Even worse, I see a bunch of clients where they'll have like 2 or 3 kids, and each one of them is claiming 2 or 3 on their return, on their W-4. So now neither one of you is taking out enough money. So then even what you get in the child tax credit and stuff like that, you still end up owing money. And usually if you're both working, you don't make enough, you make too much money to get the earned income credit and stuff like that. Again, unless you're doing, I won't call it scam stuff, but unless you're doing things like, going and getting this business and writing all this stuff off and doing all that types of stuff.
Yeah, this is really good, Eric, because I think sometimes when we were looking at that IRS tax rate sheet earlier, that it can kind of be a little scary that if I make more money, right, and I go into that I'm going to be in this next tax bracket. So it kind of can be scary, but it's like, well, even if you're going to make, and you went from 80, say you went from 80,000 and you went to 100,000, right? So I know that was kind of a big jump in there. It's like, well, there's other things you can do. You don't have to be afraid of making that amount of money. They're going to take so much money, whatever the case may be. There's ways to, still kind of, put your money in, to work. So could you speak on that, or what that scenario would be?
You can do something like, you can max out your 401k. You can open up a traditional IRA. Those are different types of things that you can do, that even though I make the income, I'm only being taxed on a certain amount. Again, a great example of that be, I make 100,000, but I'm only being taxed on 80. So I'm still in that bracket.
Right.
So that's a perfect way to think about it. And something a lot of people don't understand, you really should look at that, especially if you have like kids in college or things like that. There are certain brackets that you have to be in. I have clients that had a client today. She's in college with kids, and she makes over $90,000 a year. Now, why would that be a problem?
Why would that be a problem? Her making $90,000 a year,
over $90,000 a year with kids and going to college.
I think because you don't get like the tax break because you're not a full-time student.
No, you don't get the tax break because you make too much money.
You make too much money, right?
You make
Right.
too much money.
But
Ninety
even if
thousand.
you're full-time school, you still don't get that
You
tax?
make too much money.
Wow.
Yep.
So
See, like
it
I said, people don't know that. And so when people talk about financial planning, think about things to do with their taxes, would you rather put money into an IRA or something like that that brings you under that number? So if I'm married, it's 180. So I've actually had clients in here who were like 50, $60. Well, like I had a client who was under $1,000 over. He made like a little under 181,000, and he had kids in college, and he couldn't claim them because he made too much money. It pushed him out of the bracket. It pushed him out. It showed he made too much money in order to get the child tax credit. And again, these are things that people don't know unless you really and truly do taxes and know how all these brackets and all these things work. So imagine coming in and finding that out. It's like, man, if I'd have just put money into an IRA, or if I'd have done something like that, that would have brought me under, I'd have got all of those tax credits, all those school credits or whatever for my kids going to school. But because I make too much money, I don't get those credits.
Wow.
And that's
Wow.
just that. And then imagine what we just showed on the brackets as well. So
I'm gonna pull up the brackets one more time because I know some folks probably were asking about the brackets, and I know what we're referring back to. So we're gonna show that again. I know someone were asking about the brackets. So this is the brackets right here. Go ahead, Eric. I just want to have it up
like
one
you
more time.
said, as you can see, it's a little fuzzy, but I think I can read it. So as you see, somebody who's single, everything from $1 to 12,400 is taxed at the 10% tax rate. If you're married, everything from $1 to 24,800 is taxed at the 10% tax bracket. Everybody, if you're a head of household, it's from 0 to 17,700. Anything between 12,400 to 50,400 is taxed at the 12% tax bracket. Now, remember what I'm saying, it's between 12 and 50, not 0 to 50. Anything between 12,400 and 50,400 is taxed at the 12% tax bracket. Anything over 50 is taxed at the 22 tax bracket to 105. Then anything over 105 is taxed at the 24 tax rate. And then anything over 201 is taxed at the 32 tax rate. So as you continue to get raises and continue to make more money, you can see how easily you can bump up into these tax brackets. And if you're just claiming 0 on your W-4 and they're just taking out the 10 to 15% and you don't have kids and things like that, you can end up owing taxes. So a lot of single people who don't have kids and things like that, they end up owing taxes even though they're claiming 0. You see how easy that is?
Yeah, I see that.
And so again, like I said, I'm not trying to be funny. A lot of people come in and they're upset and they're mad. They act like, I'm doing something wrong. And it's like, you just show them the brackets. Again, the only way you can get out of it, again, like I said, is if you are doing something that is bringing your AGI down, which is bringing your taxable income down. And again, it's, if I own real estate, or, if I'm showing losses on capital gains, it's only $3,000. But if I'm showing losses on capital gains, or, again, if I'm creating a business that's taking this huge loss or something, or if I put money into an IRA, or if I make a certain amount of money and I'm putting it into my 401k or something like that. Again, it's interesting. Like I said, when we talk about different ways to save on taxes, and everybody says, "Oh, just go buy that Tesla, go buy that G-Wagon, go on that cruise." There are so many other ways that you can save that people don't talk about. They just talk about those type of things. But again, if somebody said to me, if I maxed out my 401k, it can keep me in this bracket, or I don't got to pay this amount of taxes in if I put this, if I make this amount of money, and this amount of money is going to put me in this tax bracket. A lot of people don't have that conversation.
Yeah.
When they're doing taxes and stuff.
It's really good because I would talk about I think not the FSA, but the HSA, right? If that offers that the HSA, right? That's also another thing. So if you did max out your 401k, you can have the HSA too as well, and that
Correct.
is as far as tax, because it's for specific use for
Correct.
medical, right? That it's not being taxed on that as
Correct.
well, but it's not like necessarily growing unless it gets to a certain level in your and you kind of start making some investments in that and stuff like that to make that grow for like long-term care as you get older or whatever the case may be. But you can say, well, the 22.5, right? It's still 22.5, or is it 23.5?
Oh, for the 401k, 23.05.
401k max?
23.5. Yep.
23.5. And then you're doing another 5 to 8, whatever the HSA combined with that. So you're already at close to 30,000 right there, right? So,
Right.
and then your other things that you can be able to do. So,
Right.
so yeah.
So yeah, once you start making more money, like you said, you should be thinking about, like you said, more tax advantage things that you could be doing. Again, it's not dollar for dollar, obviously. I tell people all the time, if you come in here and you owe taxes and you say, hey, what if I go put money into my traditional IRA? I still have time to do that, right? Or what if I go put money into my SEP IRA? I still have time to do that, right? Yeah. But again, it's not like if I owe 7 grand, I'm going to now, if I go put 7 grand in my IRA, I'm not going to owe any taxes at all. No, it doesn't work like that. But again, it's tax advantage to be able to do that, to have the ability to go do that, as opposed to just giving the whole 7 grand to the IRS.
So when you break it down as far as the tax advantage on the traditional IRA versus just maxing out the 401k, is that dollar for dollar?
No.
Even like if 10% is going in, for instance, 100,000, 10% is going in off top, my tithe to my retirement, right?
Correct.
So that's not
No,
that
I'm not saving
not,
$10,000 in taxes. No, I don't save $10,000 in taxes by doing
I think most people don't think that though, because
Yeah.
I'm thinking this is the 10% of what my income is going over here. So you're saying it's not dollar for dollar.
No.
Wow.
No. That $10,000 only mean taxed at whatever the tax rate is, right? It's only being taxed at whatever the tax rate is. I'm not being taxed.
But don't they take it out first and then the
Correct.
taxable
So that
income?
$10,000. So if the $10,000 was in my income, what would it be taxed at? Whatever the tax rate is. Correct?
Yeah.
Come on, Ti. Don't do this to these people, Ti. People go buy this jet, Ti, and say he's going to be a complete write-off. No, it doesn't work like that. It's whatever your tax bracket is.
I think you think about it, is like, well, if you're in the tax bracket in that tax rate, but then if you're at 100,000, just for simple numbers, and 10%, and you're putting 10% into your 401k, right?
Right.
So if you're putting 10%, even though if you're you're going to be taxed at that rate, and then they take
No, so the money that you're putting into the 401k isn't being taxed, but it's not dollar for dollar. What I mean by that is, if I didn't put it in there, I'd be taxed for it, right?
Right.
If I take it out, I don't save the whole amount. I save the tax rate. It's before tax dollars.
Yeah.
The tax rate I'm saving. So I'm not paying taxes on it. Yeah.
Okay. Yeah.
10,000 out and then pay $10,000 less in taxes at the end of the year. No, it's whatever the tax rate is. So
dang, man.
Ti.
Man,
we'll buy a jet.
Hey, I want to clarify because a lot of folks don't understand this information. That's why it's so valuable, sir, for you to educate the people that are listening right now. Because a lot of us didn't know.
It's not the information we're told. We're told to go. No, we're told to go create a fake business and write a bunch of stuff off to get you down to this level, to get this earned income credit, to get this and that, and go get audited. Instead of, when we're talking about growing generational wealth, when we're talking about these type of things, right? Whenever we talk, what do I always talk about? I talk about going investing, going in, what I keep saying, put money into a SEP IRA, put money into a traditional IRA. I don't say go on vacation. Now, if you can still go on vacation while you're investing and stuff like that, great. But if your whole mindset is I'm going to go spend money in order to bring my taxes down, and again, it's not dollar for dollar. So that really doesn't make any sense. And again, it's all a big circle. It's just like last week's conversation about the credit card. So I'm going to go get this credit card to get all these points, but then I'm paying all this interest on the card.
Yeah.
How does that make sense? And so the same thing, I'm going to go buy this car. I'm going to go on this vacation. I'm going to do all these things to bring my taxes down, but it's not dollar for dollar. If you can afford it, then great. No problem. If I can afford it, if I can afford that car, if I can afford that business vacation, if I can afford those type of things, great. But if in your mind, you're saying, I'm going to go do this and write it off, but I really can't afford that car, I really can't afford that vacation, and I'm thinking that my only thought process is I'm saving money on taxes, but I can't afford what I'm doing, there's no logic in that. There's no logic in that. That's how people go broke. That's how they file bankruptcy. That's how these type of things go. And people who get mad and say, I don't know what I'm talking about. But usually people who are doing this or who are saying, I don't know what I'm talking about, I'll just say it. They're people who do credit repair. Why are you doing all this credit repair? Why you got to do credit repair? If everybody's paying their bills and I'm lying, why you got to do credit repair?
We trying to repair the credit, sir.
Oh, it's like the conversation we were talking about, I don't want to name them, but that's a flex. They're filing bankruptcy. They're filing bankruptcy because they can't pay their bills.
Yeah.
They're not broke, but they can't pay their bills.
Yeah.
You're saying that I got all this money, but I'm refusing to pay my bills. I'm letting you shut my business down, but I got all this money. I'm just refusing to pay my rent. I'm refusing to pay my car note. I'm refusing to pay my house note. So you're foreclosing on my home and you're taking my car, but I got all this money. You sound stupid.
Eric.
Isaac, you sound stupid. I ain't broke. I got all this money. I'm just refusing to pay bills. You sound stupid.
Oh, somebody get Eric some ice. He on fire right now.
Isaac, could you imagine that just sitting at the house saying, hey, I got all this money, but I ain't gonna pay my house note. So I'll just file bankruptcy because they can't take my house. That makes logical sense to people, Isaac. And you know it does, because when we watch, because when we read these, because when we see these posts, isn't that what everybody says in the comments?
Yeah.
They're not broke. They're not broke.
Yeah. We did have a question, Eric, from Cedric. You want to check it out? So we're doing a few college tours, and our daughter is any of the travel expenses tax deductible? No. I would have asked that too. Gas, mileage, is that including for education? Is that not education? Because technically they're still in high school, right? No.
Where would you put it? Well, somebody asked me that. I said, where would you put that on your return? So if I have quote unquote business expenses and stuff, right, that will be on a Schedule C for my business, right? That's not a business.
Yeah. I can see. Yeah.
Nope.
Because it's going to college is more like debt than
yeah, I mean,
going into debt, right? Or
once you're in college and you're doing the 1098-T and you're writing off all your expenses, there are things on there you can write off for travel and books.
Once you get to college, correct?
When you're doing the 1098-T, correct.
Okay. So not while we're searching
college expenses.
We could just we could do a whole college tour, 10-city tour or something like that. And I'll be over here trying to get a little charter bus or something and take my kids around and do.
And where would you write it off at?
I'm writing all that off. Right? That's what I would think I do. I would do that, right? So
on what form would you write it off on?
I don't know. If I could. Hold up. If I have a youth program on the nonprofit side that I'm doing this for, right? And this
so the nonprofit is writing it off, right?
Yes, I guess. Would that be an expense to do that?
He didn't say he was a nonprofit. He said he was driving his daughter around. If that's what the nonprofit does,
well, he needs to become a nonprofit.
Oh, we're doing that today too. Huh?
No, I'm playing. I'm
I got a little bit of time before I go to bed. All
No,
right.
I was throwing salt in there. I was just throwing salt in there. I was like, well, you know, we've had these conversations where sometimes, you know, it's like, oh, I have my business, but I'm gonna do a nonprofit side on this because you're leveraging certain things to get certain things done. Sometimes it's a good cause, sometimes it's not. But there's people who actually do that, you know. So
Yeah, who actually have
um,
nonprofits. Yeah, yeah. I've actually gone on college tours with churches and things like that. Yeah, correct.
so we
But yeah,
just need to partner up with a
just
church
somebody just gets
and
in the
or
car
a
and takes the
nonprofit. So
job,
we can just
and
partner with a
they don't
church or a
have a business like
nonprofit
that.
that's
But
already doing
the
a church
church and the
like a tour.
nonprofit would write it off, not you. Again, where would you write it off on your return?
I don't know the line items.
Okay.
Can you pencil in and put other?
No, no, you cannot. No.
You know what? My kid is a part of my business. No?
Do you have a business?
Yeah.
Okay. Next question. But I thought it was important.
So said that's not the answer I wanted.
But
Sorry
again,
about
like I
that.
said, you know, we're thinking about things we want to talk about every week. This has been I won't say a very hot topic,
Yeah.
but it is usually a topic of discussion. At least 2 or 3 people every day, we have the conversation about, hey, you need to change your W-4. You know, you need to think about changing your W-4. And it's usually people who owe money. If you don't owe money, I'm like, you know, I wouldn't touch it. I would just leave it as it is. You know, if you walk out of here not owing money, you know, that's a good thing. You know, everybody doesn't need to get 5-6 grand back on their tax return if they don't have kids. Because again, you're basically loaning money to the government. Usually if somebody owes that type of money, I tell them, hey, you need to start putting that money into your 401k. You know what I'm saying? You know, you need to your up your 401k at work because you're not living check to check if you're getting this huge check at the end of the year because you're taking way too much money out. So, you know, maybe you need to, you know, put more money into your 401k. Maybe you need to open up an IRA. You know, a Roth isn't going to help you tax wise today. A brokerage account isn't going to help you tax wise today, but it's going to help you grow. Because again, all we talk about is growth, right?
Right.
That's what everybody talks about, right? Everybody wants to have all this generational growth and all that stuff. So those are definitely the things that you need to be talking about, as opposed to saying, you know, I want to go buy this car, or I want to go on this vacation, or I want to do this or that, whatever with this money. It's almost like with the kids, you know, we were talking to this weekend, you know, it's
Yeah.
like you need to really start thinking about saving money, you know, compound interest, time value money, all time stuff like that. And again, if you start at a young age, it can really grow. And if you're really taking it out of your check so you don't even see the money, that's real simple. You know, you just adjust your budget once you start moving that money over.
Yeah.
But again, we don't, like you said, we don't have these conversations. We go get more credit cards. We go
I,
get somebody to help us go get all this line of credit and all this stuff to continue to grow more debt.
yeah.
I can't understand it for the life of me. I can't understand it. You know,
I mean,
everybody.
it's available, Eric. It's available. Every December, I always get the email. Do you want a holiday loan?
Somebody just texted me about a line of credit. I get it all day.
You want a
I get
holiday
it all day.
loan so you can have your kids to have a see how that you don't see how that happen. Your kids can have a good Christmas,
Mhm.
right? I'm like, they ain't
But
get
it's
nothing, right? That's my
crazy.
whole mindset. They
But
ain't
it's
get nothing. They got a roof
crazy.
over their
Yeah.
head. I'm going Maslow's hierarchy of needs. They got a roof over their head. They got food. They're safe. They clean. They got clothing. That's what matters, right? Not
But
all
it's
these toys.
crazy to sit here in January and say, I'm gonna open up this high yield savings account and put $100 in it every month. So I'm gonna have $1,200, $1,500 in December. That's not logical. That's not logical. I'm gonna go get this Klarna I'm gonna get this Affirm. I don't even know what they're all called.
That's
I'm gonna
right.
go do
Those are
that.
right.
Yeah. You know what I'm saying? I'm gonna go do all that and then have to pay it back, as opposed to in the mindset of saying I'm gonna take $100 a month till December, and if I put in a high yield savings account, I'm gonna have $1,200 to $1,500 in December.
Yeah.
That makes
Got
too
a
much
question.
sense. Yeah, that makes too much sense apparently. So it is what it
Got a
is.
question here from Rod. If you owe money,
So
what should
if you owe money, depending on how many kids you have, so usually, especially most people who make a certain amount of money, I don't even care how many kids they have. I say you both should claim zero. We have kids. Nope, you should both claim zero. Because again, even if you have kids and you get the $2,200 credit this year, if you have kids over 16, you get the 500, you could still end up owing money because, like we showed in the brackets. So if you're somebody who makes money, who makes a certain amount of money, I say you need to claim zero. I don't care how many kids you have. I don't care if you have kids in college, any of that. You should claim zero. And if you're
even if
fortunate
they
enough
max out their
to,
401k?
yeah, and that too, obviously. But definitely change your W-4 to zero all the way around. And some people, we even say maybe you need to put a couple $100, a check or a month into it as well. You need to add money as well.
I know they
Because
have that
again,
item
we
on
show
there
the
where you
brackets. Yeah,
right.
you can do that. Yeah. Because you see in the brackets, if you start making a certain amount of money, and again, some people might think 50,000 a piece is a lot of money. A lot of households, they both make over $50,000 a piece. So it's not so I know the average, I think the average household is what 80, 90,000, but there are a whole lot of people who make over 100,000 a year, whose households make over $100,000 a year. And you see the brackets. So
So if you make 200,000, could you bring it all the way down to that 12% tax bracket, whatever that is? Could you
you
bring it
saw
all
what
the way?
Grant Cardone told you to do?
You know what I'm saying? So I'm
You
like,
saw what Grant Cardone told you to do? But Grant missed out a line. He missed a line that
yeah,
if you make that type of money and you're not a real estate professional, you can't write any of that off.
mm,
He didn't tell you that line.
yeah,
He didn't tell you that line. If you're not a real estate professional and you make over a certain amount of money, you can get all the real estate you want. But if you're
mhm,
not considered a real estate professional, all you can do is carry those losses. You cannot bring your AGI down to what he told his daughter to do. Told his daughter with her
yeah,
$200,000 job to go get a $400 rental property. I don't know where you can do that at, but told her to go get a $400,000 rental property, make it $200,000 a year, and then write it all off that 1 year. Then what
yeah,
does she do the next year? You know, if she does the bonus depreciation and all that to bring it down to to bring her income down. Remember, he said what? The 12,000. Why did he say that? The brackets.
yeah. The bracket, yeah. Got another question.
Oh,
So having auto
perfect.
withdrawals from my paycheck is invaluable to paying
Perfect.
yourself first. If I increase my auto withdrawals to match my pay increase percentage each year, those auto withdrawals go towards a variety of investment vehicles.
Absolutely perfect. Because again, everybody says I live paycheck to paycheck. We're taking that out of your paycheck. So you don't even have the ability to spend it. Like Rod has said, I don't even have the ability to take a look at it and spend it. It's already gone. Just like with the 401k, that money does not even hit your bank account. So you don't even have the ability to spend that money. And on that, if he has auto withdrawals that are going into a brokerage account, going to a savings account, going to a high yield savings account, going into all those different types of things, you can't even spend that money. So again, you're having to adjust your budget with the money you have while you're still growing your wealth and all these things that people like Rod are putting their stuff into. Absolutely
Okay.
perfect. That's exactly what we're talking about. Absolutely perfect. But again, it takes maturity to be
Mm,
able to pay yourself first. So that's how come most people have 401ks because that money automatically comes out of your account. If somebody said, I got to put money into my IRA every month and I got to physically do it, unless it's auto withdrawal like Rod said he's doing, a lot of people don't do it. Something comes up. Something comes up and they spend that money instead of doing what they said they're going to do with it.
Well, something comes up, and if we don't have the emergency fund to be able to help when something does come up, then we dip into our self-pay, correct? Is that right?
Yeah. But the part you're missing is when somebody says something comes up, what does that mean?
That could mean a lot of things. I don't know what that could mean a lot of things. You know what I'm saying?
A
Something
lot of
came
things.
up,
That's usually the problem.
you
Something
know.
comes up. Again, it's again, everything runs in a circle. It's like the credit card thing. A lot of things you probably would not buy, Isaac, if you did not have a credit card. Not you personally, but a lot of people, there are things you would not do and you would not buy if you did not have the ability to put it on your credit card and say, I'm just going to pay for it later. It's why in my opinion, I think that's where the Klarnas and the firms and places like that, they messed up because they gave the people the ability to go buy cruises, things that they're buying on that they could not buy right then and there. So it's layaway with me letting you take it instead of
Right.
holding it in layaway.
Yeah.
And that's why they're in trouble now because people, I got it now. So why am I going to pay you? I've got
I'm
it
not
now.
gonna pay you.
I'm not going to pay you. I've
They'll
already
let it
went on
go
that
to your
cruise.
credit and
Yeah,
all that good stuff.
because you
They
got all
don't
these
care.
people telling you, yeah, because they got those people telling you they can get it removed from your
Yeah.
credit in 14
So
days.
I can
Even
just
if it's
talk.
yours,
I just talk to them a credit repair person, and they'll be able to get me fixed up back again,
in
and I'll be
14
good to
days,
go
you'll be good to
again.
go. And the wealthy people are filing bankruptcy. So hell, what? Why do I got to pay any bills? Do you see how stupid that sounds? And then Isaac got the nerve to say that your credit score is going to immediately go up when that stuff gets removed. Huh? Like they don't understand how credit works. All the credit history and all that stuff goes away, right?
What credit history?
If I get all this stuff removed from my credit, it's like somebody paying off a card and cutting up a card. Why do they tell you not to do that? The debt ratio and the credit history, right?
Yeah, my stuff's still on there. They still show the history, which is still a part of my credit.
Correct.
My student loans has been paid off, but they
And I don't
still
even
show
do
all the different ones
and I
that
don't
are on
even
there.
do credit repair, Isaac, and I got common sense enough to know that. But all these people who are giving out books and telling people they can remove all this stuff off your credit and immediately jump you up to 800 by removing all of your bad stuff off your credit will automatically jump you up to 800.
Now you're gonna have to work for that 800. I'm
No,
sorry.
no,
I'm sorry
no,
to say.
no,
You
not
want to
according to
earn
all these.
that.
No, sir, not according to all these people do credit.
You better tell them you want to earn that one.
Nope,
You
not
you
according to
want
all
to
these people
earn
do
the
credit.
800. You don't if you're not in the 800 club, you probably don't deserve to be there. Not just yet. So you
Not
know you
somebody
got to earn to
sweeping
get
your,
that.
not somebody sweeping your credit.
No, you
Then
got to
you're automatically in 800 club.
earn that one. So
I'm doing the JT.
you get some decent credit, but that 800 gonna be hard to work for. But you gonna get there. It don't happen overnight for sure.
But like I was saying, usually like when we think about what we're going to talk about on every Tuesday,
Right.
it could be something that I'm dealing with on a daily basis. And, especially now with so many people, again, I told you, you don't even really see the videos anymore anyway, do you? About all the people saying they can do the advances and
Yeah.
give people all this money because now the people who are doing their taxes now, they're not about that nonsense. They're not about that. So like most of my clients right now are partnerships, S corps, people with businesses and stuff like that. They're not about, hey, I'm trying to get 12, 10, $12,000 because I got 3 kids and stuff like that. All that is gone. That's usually like I said, the first couple of weeks of January, February before the PATH Act stuff. And so those are the people who are usually trying to do that stuff. But so many people see that type of stuff. And I'm going to a regular job and I got a couple of kids and you're upset at me because you can't understand why you're not getting 4 or 5, 7, 8 grand back. And I say, you make too much money. They're like, what are you talking about? You make too much money. You make too much money to get the earned income credit. And depending on how much money you make, again, that's not my thing that we're showing. That's off the IRS.
Mm.
Those are not my numbers. Those are from the IRS. So the only way somebody can help you with that is what? They got to create a fake business and things like that to, again, bring you down in the brackets and then get you the earned income credit and stuff like that. But if you're doing legitimate stuff, if you're doing legitimate returns and stuff like that, those are the type of numbers that you see on the brackets that we've been showing tonight. So,
That's good stuff,
and
man.
again, I'm trying to be good, Isaac. You know,
No,
like,
you good. You're good. You're good. I hope. Hey, everybody's loving this conversation. And, the queen, gave show you some shout out love out there, right? So, you're on fire. That's why I said he
I mean,
needs some ice.
it's not even frustrating because when you're watching it, you're kind of like, why do people believe this type of stuff? Is what you kind of say to yourself. Why do people believe this kind of stuff? But they do. It's like people who get conned. Would you like to talk about the young lady with the $800 finance courses?
Oh wow!
Stuff like
You
that.
got go ahead if you want to.
So the young lady who was squatting in the house teaching $800 finance courses while she's on food stamps and squatting and not paying for her house and stuff like that. And everybody's in the comments saying she's really got money. She's just not paying her bills. She's taking advantage of the system. She's doing what Donald Trump did. They're getting ready to all file bankruptcy like Donald Trump. And again, if I have to have one more conversation with somebody to explain the difference between a Chapter 7 and a Chapter 11 bankruptcy, I don't know what I'm going to do. That's the one thing I give JT credit for, is that he's definitely showing people the difference. Like if you saw the Cesar Pena thing that he just did the other day, where he said, yeah, Cesar tried to file Chapter 11 because he didn't want them to take his stuff. He's like, hey, I'm going to pay these bills. Just give me a little time. And then, like I said, then when they went in and investigated, they're like, you don't have any money. You can't pay this stuff back. So now they're trying to take his stuff. I'm trying to stay out of the Uncle Nearest stuff because, again, I don't care personally, but I'm trying to stay out of that. But same example.
Yeah.
They're getting ready to start selling her stuff off.
Yeah.
Because they're like, there's no way possible you can pay all these people back. Yeah. There's no way possible. So that's how come they're trying to sell her stuff. She can't, I won't say she can't file Chapter 11 because, again, I'm not filing like that. So don't say I'm saying anything. But usually, like they say, when people file bankruptcy, when you file Chapter 11, Chapter 13, those are the ones where you get to keep everything. You're just, regrouping, resetting yourself basically and going on payment plans basically. So they don't sell all your stuff off. A person who files Chapter 7, they're like, hey, I can't pay anybody. So please let me keep my house. Please let me keep my car, but I can't pay anybody.
Yeah.
But people don't understand the difference between those two, apparently, when they're making these comments.
It's crazy, Eric. I know we're wrapping up on this show. If anybody has any questions, anything at all that you would like to drop in the chat, please do so. Please do that. We'll be here every Tuesday live. So if you have any questions real quick, please drop them in the chat. If you're there, please let us know if you have any questions. Eric, as you wrap up, what is the overall takeaway keys as far as folks at home?
Definitely for me, like I said, I had somebody today who came in. I showed her the W-2 from 2024. I showed her a W-2 from 2025 and showed her the difference. She said she made no changes. She said, I did not make any changes. I said, again, like you said, somebody made changes. And again, you might not be paying attention to it when you're getting your check. And again, I know it's crazy to say to people because most people just get their money direct deposited so you don't get a pay stub and stuff like that. But you might want to really and truly take a look at your pay stubs throughout the year just to make sure where it shows, all the taxes being taken out. So it's not a huge surprise at the end of the year when you walk in to go get your taxes done and you put your W-2 down and they're like, hey, these are your numbers. This is your W-2. This is the federal that's been taken out. You're not taking enough federal out. And again, most might look at it and say, okay, well, I'm just getting a smaller check. But That's again, it's most people who don't owe. If you owe, then you're really upset because sadly, in many cases, Isaac, when people owe, they can't afford that bill. So now I got to go on a payment plan in order to pay that bill back. So again, now that's in my budget. Instead of me budgeting, changing my W-4 or whatever, so now I have to budget for that payment to the IRS, or they're going to start garnishing my pay and doing all that. And plus, I'm paying interest on it, as opposed to putting more money into your 401k or changing your W-4 or all those type of things. We don't think about those things until, like you said, until you're sitting in front of the person who's doing your taxes and they say you owe. And then they storm out because they say you don't know what you're talking about. I tell people all the time, if all you have is W-2, Isaac, your taxes are your taxes. Don't I say that all the time? Your taxes are your taxes. Your AGI is your AGI. Your standard deduction or itemized is that. Your taxable income is what it is. The tax on it is what it is. The only thing that determines if you owe taxes or not is if you have kids in college, and what you take out. That's it. There's nothing else, right? Once you get from taxable income down to the tax liability on that taxable income, the only thing that changes that, if you're just W-2, the only thing that changes that is the kid exemptions and how much money you've taken out. Unless you got solar panels or something. But again, that's just going more deep into it. But again, it's what your exemptions are, what your credits are, and how much money you've taken out. That's it. You can be mad at the person doing your taxes all you want, but your numbers are your numbers. Correct. He's saying exactly what I'm saying. Budget it now, as opposed to now I have to call the IRS and set up a payment plan. So now that is in my budget. That's an expense that's in my budget now, right? I got to pay that every month. In some cases, I got to pay, they'll let you break it down for 72 months. So now I got this bill for the next 6 years. And that's if I don't owe taxes the next year to put to.
That's wild. That's wild.
It's wild. It's absolutely wild. And again, it's because you're making the choice to not have less being taken out of your check throughout the year. Instead of changing your W-4 or putting money into a 401k or all those type of things to bring your taxable income down, you rather just wait till the end of the year and then owe taxes and then have to call, if you don't have the money, to then have to set up a payment plan. So, and like Rod said, so now it's part of your budget. It's an expense on your budget sheet now. So.
All right. That's good. Thank you, Eric. I really appreciate it. I hope you had everything you had to get off your chest tonight regarding this. So I really appreciate it. Those of you tuning in tonight, thank you for tuning in. If you have any questions or anything, please reach out. Please also go to thefinancialturtle.com and follow and subscribe on Facebook, YouTube, Instagram, and TikTok. Thanks, Leah. Thanks, Roderick, Rivey, Cedric, all those who tuned in tonight. All right. We'll see y'all next week.
I appreciate it, sir. Have a good night.
All right.